where should you place your bets? Let's try to decode that with a whole of experts joining us. And let me welcome on board Sandip Sabharwal on the show as well. Hi Sandeep, good afternoon and great to be speaking with you yet again. Help us with the kind of sectors that you are looking at this point in time. A lot of sectors churning underway. The theme of this particular month has been defense, has been some of the counters from the railway side as well. But what is looking good to you right now?
I think defense stocks rallied subsequent to the Indo-Pak conflict and potential increase in order. Some of the companies obviously came out with very good results, like Bharat Electronics, etc., while the results from some others were subdued. And railways stocks have bounced back from extreme oversold level, like from last year levels. Many of the railway-related stocks got sold off a lot. But there's no clear change in the railway investment theme at this point of time in terms of the railways actually picking up steam in terms of getting into investing more like it did in starting 2022 onwards. So I think these could be just bounces because the stocks have got sold off a lot. The results picture has been pretty okay. So in line with expectations, some companies above, some below. So nothing much out there. Overall, uh, I think markets are decently placed. The risk in the market is just the kind of promoter selling which we are seeing in the markets, starting with the larger ones like Singtel, Interglobe Aviation Sale, as well as ITC, and then a slew of mid and small cap promoters selling their stakes. So I think that is the risk to the markets. X of that, overall macro scenario looks okay.
What's the trend that you really need to draw up from these promoter exits which are happening? The fact that these are ripe valuations in the market couldn't get any better? I mean, is it warranting caution now?
In some of these stocks, I would say yes, because if many of these companies are giving very strong outlook for growth for their companies, and then are coming out and selling huge quantity of their stocks at very high valuation, then getting absorbed by the uh, institutional investors because the companies are given very strong guidance, that itself is a dichotomy because if you're so confident, why are you selling? On the other hand, I think for some of the larger companies like Interglobe or let's say BAT for ITC, etc. There, I think we cannot surmise the same thing because there in Interglobe Aviation, we've seen continuous sales by Rakesh Gangwal over the last few years. And now I think we are coming to the end stage of that. So hopefully over the next 1 year, all of that will get sold out. And for ITC also, I think BAT needed the money and so they have sold. So I think I would be more concerned on the small and mid cap promoter sales rather than the bigger ones. But then that said, even the bigger ones then take out the liquidity from the system and to that extent restrict the market upside.
I want to run in some of these stocks with you wherein we have seen large, promoter exits. You've got a Bharti, you've got an ITC, Interglobe Aviation, and even Paytm. Let's pick up Bharti and Interglobe first because these have, in some sense been very leadership names. Do you sense any weakness on the charts?
Not really. In fact, these stocks have a habit of just about stalling after a phase of a decent rally. I think both of these stocks are actually going through very similar kind of a price action where you're seeing Bharti Airtel as well as Interglobe Aviation. I'll probably club even the likes of ITC. I think more or less range bound. Yes, maybe the range would have shifted for stocks like ITC after that sell-off, which we've seen yesterday. But I think it should not impact the medium to longer term trend for these stocks. What matters is, for these stocks is consistency of volume action if in case there is any kind of a major reversal. Like for example, many of the mid caps and large caps, they started to see high volume price action in mid of September 2024, and from there on we saw the reversals happening for stock prices initially very gradually and then picking up pace going forward. But I think we are not seeing those kind of signs where the volumes have increased up higher. So except for those one-off selling which is happening on the back of higher volumes, I don't see any major pattern reversal for these stocks. And in fact, the best part about these names and many of these stocks, like for example, Interglobe Aviation, Bharti Airtel, etc., is that these stocks are perched much higher above their long-term moving averages. So there's a lot of cushion for these stocks, even if there's any kind of a short-term price aberration into these names.
All right, so that's the day coming in on some of these large caps. But MNCs, they are cashing in on from India because from BAT trimming its ITC stake to speculations of BP exiting Castrol, multinationals are unlocking billions in their Indian arms. FIIs have also pulled back from the large caps like IndusInd and Tech Mahindra, but the Nifty MNC index tells a mixed story. What are the exits that are heating up and why rather these exits are heating up, and is this a long-term trend? Sharad joins in with all the analysis. Sharad.
Well, yes, India is a high growth market, and that is why MNCs are looking at important exits at higher valuations as well. MNCs have been paring stake in their Indian arms. Of course, for ITC, they are not promoter, but the largest investor, British American Tobacco, recently they sold 2.7% stake, now worth being almost 13,000 odd crore rupees. Bharti Airtel, Pestel sold almost 1.2%, almost 13,221 crore rupees. And Whirlpool and Hyundai, both of them had exits. Whirlpool, of course, has stated that they would be exiting more of their stake. And Hyundai, recently the IPO came and the parents stole stake of worth almost 17.5%. Also, Castrol, the speculations is of BP exiting, especially the restructuring in the lubricants business. Bajaj Finserv or Bajaj Finance, if you look at it, the alliance is exiting the JV with almost a 26% stake which is being bought back. So that is also a value unlocking coming for the MNCs. And lastly, the LG Electronics IPO, that's expected to range between 11 to 13,000 crore rupees, and the IPO is expected to come in the second half of this financial year. Interestingly, apart from this, FIs have been reducing stake in the large caps, and the current holdings is coming at, of course, 29.55%. That's IndusInd Bank. Almost 17% stake have been sold by FIs over the last 3 years. And also Tech Mahindra, Trent and Kotak Bank. These are the nifty companies. We have seen there has been a massive sell-off coming when it comes to the FIs. Now let's look at how the Nifty MNC index has formed. There are like 30 stocks where more than 50% is held by foreign ownership, and over here, over the 1 year itself, the gainers, it's Hitachi Energy and Suven Pharma. Now the name is Cohance Life Sciences. Apart from this, United Spirits, Crystal and About India also make it to the list. Now first, let's look at the losers in the MNC space from the Nifty MNC index. We have largely the capital goods and automation names, ABB and Honeywell. Of course, the valuations were a concern in the street. And so, if you include SKF and Timken and even Cummins India, actually entire pack, you see there has been a correction, there has been a rally, and of course the Cummins India came with their numbers also, which was weak. But overall, 1 year itself, there has been a big profit booking in the capital goods space, especially in the MNC part.
Right, okay. In fact, I'm going to, pick up one of those stocks, Cummins. Look at the stock right now because it's holding up very well. While yes, the numbers weren't as great, but the guidance has been very strong from the management. They're saying that they expect margins to improve and that they're seeing double-digit growth in FY26. I'm going to get Sharad back and highlight what the guidance and the commentary from the management has been like.
We did have a good quarter in terms of all our segments performing well. There was, if you're comparing to the same quarter last year, there was a lot of pre-buy in the power gen segment, and that was not there because we have moved to CPCB 4 Plus fully, and that is what you saw in this quarter. Although if you will see at a full year perspective, our margin performance is pretty healthy. And this is a quarterly impact, but I would say that from a full year performance, the margin performance is as per our expectation. And we continue to put in efforts in terms of cost reduction and improving our products for the market. So we anticipate the margin performance to sustain. In the CPCB 4 Plus segment, definitely the competitive intensity has increased in the quarter. I spoke last quarter that all competition launched their products and there is intensity in the market. We have been able to hold on to our prices till now. But as any new technology product gets launched, it takes a few quarters for pricing to settle down. We do believe that another quarter or so it will take for pricing to completely settle down in the market.
Okay, that was Shweta Arya, the MD at Cummins India, highlighting the management commentary. But Sandeep, help in where within the entire cap goods space do you see value on the table? Would you look at Cummins, L&T a little bit more? Anything that you like?
Yeah, L&T is well placed, so I think it should continue to do well. And among the other companies, I think right now, although many of these companies have indicated that the order booking should pick up and execution should pick up, for many of the companies, the result delivery has been subdued and valuations are not very cheap if you look at the large MNC companies like ABB, Siemens, or even Cummins, or the other companies like Max, etc. So it's only a question of trying to buy at the right valuation. I think valuations are not cheap even now.
All right, so that's the day coming in on Cummins India. But Sandeep, the other factor that the management of Cummins India was actually highlighting was the data center theme. While they say that they are witnessing strong demand in the data center business and in the power gen segment as well, in the domestic market, they see the demand coming up. Because of late, and Sandeep, given the market volatility and correction, we have stopped discussing about such themes. But do you believe that this is a long-term story and select companies are doing very well? And if you can highlight some for us?
Companies will be tough to highlight, but I think overall, directionally, it's a global theme and it's there in India also. More and more investments into data centers, etc. So often I'm unable to recollect the companies which could be key beneficiaries.
Cummins, ABB, L&T, what's looking like a good near-term trade?
I think there is a strong consensus move into all of these stocks, coherent move into all of these stocks. In fact, it started off with L&T, if I'm not wrong, just about a week or a couple of weeks back post results, where the stock managed to break past above a series of underperformance. There was a point where I think L&T was trading or had managed to break past above the 200 DMA. That move, I think, and I think the move, follow-up move for the stock post that, I think has led into the confidence into the other names. We've seen Siemens, for example, that stock has managed to break past about the 3,000 levels. Cummins today is seeing a classical breakout. It's almost like a 3-month breakout for Cummins of a major consolidation. And then I think ABB also has a very similar kind of a very slow, gradual uptrending move. So all of these stocks have actually started to show signs of a very strong recovery. Now the ideal trade over here should be to go back with the leader and the one which had given a fresh breakout initially. And even if the stock is consolidating, and I think in that respect, I would believe L&T could be one of the better picks. But in terms of a slightly high momentum, pick, Siemens could be the other stock, and I think the stock which is still down, I think 5% if I'm not wrong from its 200 moving average, there could be a slightly higher alpha which could be generated over here. So both L&T as well as Siemens could be one of the best picks from the pack.
Well, the star performer today is, guess what, as surprising as it may be, IndusInd Bank. And this after last evening, there were red flags which started waving once again, and now SEBI has barred the former MD and CEO Sumant Katpalia from buying or selling shares in the markets, accusing him of sitting on price-sensitive information and not making timely disclosures around high-risk derivatives exposure. In fact, Ankur Mishra, my colleague, is here with more details on what exactly has SEBI said about the former promoter.
Market regulator SEBI is probing insider trading angle against 5 individuals, including former CFO Khurana and MD and CEO Sumant Katpalia. But the bigger question is, when did SEBI actually came in action? We have been informed through sources that SEBI started investigation ever since disclosure was made by the bank on 10th of March 2025 that there is a discrepancy in the derivatives portfolio and the impact could be 2.35% of the net worth. Therefore, market regulator obtained all the emails, and in that it was found in December 2023 itself, there was an email exchange between the management. In fact, former MD and CEO Sumant Katpalia had stated in an email that there will be huge impact of the discrepancy in the derivatives portfolio, and in that email exchange there was also found that the impact was assessed to the tune of around 1500 crore then itself. However, when you remember the commentary which was given by the management on 10th of March, it was told that only after Reserve Bank of India guidelines came, the impact was assessed, and it was a material impact, and only then disclosure was made. So SEBI has clearly found that unpublished price sensitive information, which is UPSI, and it comes into the domain of insider trading. Hence, these 5 individuals were probed ex parte. What does ex parte means? Meaning they were not given any time for hearing. So now SEBI will obtain details from these 5 individuals. For now, there is a freeze on their accounts, a demat as well as bank accounts, and the loss to the tune of 20 crore is assessed by the market regulator. Out of that, 14 crore has been obtained for former CFO Khurana, and around 5 crore for former MD and CEO Sumant Katpalia.
Okay, further and further allegations against the former MD and CEO now Sumant Katpalia made by the market regulator. Sandeep, this curious case also continues. The reverse aging also continues for the stock. I guess around 600, the market had already baked in the worst that could happen for IndusInd.
Yeah, so I think in most of the financial cases, as we've seen Aisha in the past, what is the worst is sometimes very tough to evaluate. So there is a possibility that the worst could be over, and there's a possibility that many more things could come out of the cupboard, many more skeletons could fall out. I think people need to be cautious about these kind of stocks at this point of time when there's a management change happening. When the management changes, what else will come out, we don't know. So there's time to be cautious. I would say that this is not time to be brave in these kind of stocks.
When it comes to such counters, that's the take coming in on IndusInd Bank. But other than that, today we are seeing select chemical counters that are doing very well. Well, of course, leading it from the front is Deepak Nitrite, almost a 6% jump coming in on this particular stock. But Kunal, quickly, if I can have your take on this counter, chemical as a theme has been holding up well. But what exactly are you spotting for Deepak?
Yeah, in fact, many of the stocks in the chemical space, whether it's SRF, it started off with that. And then I think recently we saw Aarti Industries also making a comeback just about that 470, 480 plus mark. So I think on the back of this, I would expect that this could be a decent momentum for Deepak Nitrite specifically. Today's volume uptick, which we've seen into the stock price, comes at a point where the stock is completing almost a 7 or 8 consecutive day of negative price trend. So this could be a very interesting turn of events for Deepak Nitrite, and this could probably mean that the underperformance which was there with respect to other peers for this specialty chemical stock, I think that should be over, which means we should be seeing a decent upside going forward. The nearest target which one could expect would be around the 2200 mark, which is also the breakout point for the stock in the medium term.
Okay, just want to check in on Max Financial as well, given that the MD CEO Prashant Tripathi has stepped down. He was, of course, holding the helm for the last 6 years. So that's one stock which is also gap down, and then from there it's mildly recovered. Jatin Gedia as well joins in on the show. Jatin, hi, afternoon. What trends are you picking up in the market? Any pockets which are looking like they're showing leadership?
Yeah, good afternoon, everyone. So, as far as pockets of strength goes today, IT and metals are showing a positive momentum. I believe that some of the metal counters are looking strong. One pick that we have from the metal space is Jindal Steel. So, it has been consolidating since last 5 to 7 odd trading sessions. Has formed a triangle pattern. We are expecting a breakout in the Jindal Steel stock. So that is a buy or a long idea from our end. One should keep a stop loss of 948 for target of 1000 on the upside. Another stock that we just discussed is on Deepak Nitrite. So post the recent decline, it has now resumed its trend. So Deepak Nitrite has a significant upside from current levels also. So that is a long idea. Stop loss should be placed at 2060, and on the upside, we are expecting 20 to 45 as a target.
All right, so those are the long-term bets coming in from Jatin. But with this, viewers, it's now time to slip into a very short break. But before we do that, India Inc. Leader Sunil Bharti Mittal is making a case for a flat 25% tax rate and foregoing the complications around direct and indirect taxes. At the CII Business Summit, the Bharti Enterprise Chairman adds that US-India bilateral trade negotiations are in advanced stages. Listen in.
Tax policies, which continuously are getting better, need to be further demystified and simplified. The movement towards 25% corporate tax, to my mind, was a fine example of the government, where they said, give up all your exemptions and move to a flat rate of 25%. I'm surprised the entire industry has still not moved there. Let's also get rid of the old fascination with those exemptions and move on to a simplified, flat 25% tax rate. We should not stay back in the old regime. There are lakhs and lakhs of crores stuck in litigation, in direct taxes, in indirect taxes, and other regulatory matters. Vivad se Vishwas tak type of schemes need to be brought up. Government will get very large amounts of money released by those schemes. They can be put to good use now. Maybe the government will win in 10 years' time, and that money may become available to the government in 10 years' time. Why not settle it now on the lines of VSBT? More money in the hands of the government today will give us the necessary desired fillip to the infrastructure, to various social programs that is vitally needed, and importantly, release the industry